What if the difference between a failed prototype and a breakout startup isn't the idea but who you listen to and when? Great startups don't build in stealth. They validate in public, not with surveys, but with behavioral evidence. Real people trading real time or money for an imperfect solution. The top 5% do 3 things differently. First, they test outcomes, not features. Instead of asking, would you use this, they offer a concierge MVP, manually delivering the core value, for example, booking calls, curating content to see if users stick. One edtech founder spent 3 weeks texting personalized study plans, minus 78% of users paid $20 month asterisk before a single line of code was written, asterisk. Tools like Sprig or Delighted turn passive users into codesigners and surface asterisk y asterisk before churn happens. Third, they track leading indicators of love, not just revenue. Did users invite a colleague unprompted? Did they customize settings deeply? Did they defend the product online? These signals predict retention 6x better than NPS. Crucially, great founders separate signal from noise. They ignore polite praise. They hunt for friction. The user who almost quit but stayed? That's where the real insights live. And they know validation isn't a phase. It's perpetual. Even at scale, Airbnb still runs customer shadowing. Engineers spend a day with hosts, watching real struggles. This isn't about pleasing everyone. It's about finding the few who need you desperately and building exactly for them. If you're building something that matters, hit subscribe, like, and share this video. Tap the bell icon for our latest on innovation AI, where we spotlight not just what works, but why it sticks. Because market success isn't predicted, it's proven, one real user at a time. What if your startup's first 10 hires matter more than your first $10 million? Great startups don't just attract talent, they curate conviction. They know early hires aren't employees, they're co-architects of culture, and one misfit can derail momentum for years. The best do 3 things differently. First, they sell the struggle, not just the vision. Instead of polished pitch decks, they share raw challenges. We rebuilding our API in 6 weeks, ULL own it, end to end. It'll be messy. You'll learn faster than anywhere else. That filters for builders who thrive in ambiguity, not just prestige seekers. Second, they test contribution, not just competence. A coding challenge expected. But top startups go further. Spend 90 minutes with our support team. Find one friction point and propose a fix. Or, review this user interview transcript. What's the real unmet need? They hire for judgment, curiosity, and user empathy skills no resume proves. Third, they decentralize hiring. The founder doesn't approve every hire. Instead, teams run trial projects, a 3-day paid sprint on a real problem. If the candidate ships value, the team votes unanimously. No veto. This builds ownership from day one and ensures cultural fit isn't dictated from the top. Crucially, they onboard for impact, not orientation. Day one isn't HR paperwork. It's, here's a real bug affecting users. Fix it. We'll pair with you by week 2. New hires have shipped and earned trust. This isn't about perks or ping-pong tables. It's about designing a hiring system where the right people self-select in and the wrong ones opt out gracefully. If you're building a team that lasts, hit subscribe, like, and share this video. Tap the bell icon for our latest on innovation AI and startup excellence, where we spotlight not just who to hire, but how to build a magnet for the right people. Because culture isn't set by values on a wall, it's forged in the first 100 days, one deliberate hire at a time. What if the biggest startup killer isn't competition or cash, but imbalance? Too much strategy without execution, beautiful decks, no users. Too much execution without strategy, grinding faster in the wrong direction. Great startups master the tension and treat it like oxygen. Invisible, essential, and constantly The best leaders build rhythms, not roles. Every Monday, the team reviews both. One metric that proves they're moving the needle today, for example, activation rate, and one signal that validates long-term direction, for example, user-reported job-2-B-done alignment. No vanity metrics, just truth. They protect 2 time zones, deep work blocks for building, no meetings, no Slack, and strategic pauses every 6 weeks, 48 hours to step back, talk to 10 users and ask, are we solving the right problem or just the loudest one? Airbnb calls this getting out of the building. Not a tactic, a ritual. Crucially, they speak 2 languages. In sprint planning, they translate vision into tasks. This button isn't just UX. It reduces support load, freeing us to onboard schools next quarter. Asterisk in board updates. They ground growth in behavior. 30% mom isnt just traction. It s 127 teachers inviting peers unprompted, and they know when to tilt. Early execution dominates. Ship fast, learn faster. At inflection points 10K users, first enterprise deal, they pause not to pivot but to refine the why. Stripe didn't shift from payments to banking overnight. They layered strategy asterisk on top of asterisk execution. Each new product validated by real demand, not just opportunity. This isn't about having a visionary and a doer. It's about building a team fluent in both, where every builder thinks like a strategist and every strategist ships like a builder. If you're leading a team through uncertainty, hit subscribe, like, and share this video. Tap the bell icon for our latest on innovation AI and startup excellence, where we spotlight not just speed, but direction with momentum. Because the future belongs not to the fastest, but to those who know where to go and how to get there together.
What if the most dangerous round of funding isn't the one you can't raise, but the one you shouldn't? Great startups don't chase capital. They treat funding like oxygen, essential, but only useful when aligned with mission and momentum. The best raise not to survive, but to accelerate a proven trajectory. They time raises around validation inflection points, not burn rate. One climate tech founder waited until after signing 3 paid pilot contracts with utilities, then raised $12 million at 5x the valuation she'd have gotten 6 months earlier. Capital became leverage, not lifeline. They choose investors like co-founders, for strategic access, not just check size. A health tech startup passed on a top-tier VC to take a smaller round from a syndicate of hospital execs, unlocking pilot pathways no money could buy. Capital opened doors. Relationships open wards. Crucially, they modeled downside rigorously. Before accepting term sheets, they stress test. What if growth slows 30%? Can we still hit milestones? Do we retain control to pivot? They negotiate for flexibility, milestone-based tranches, founder-friendly liquidation prefs, not just headline valuation. And they know when not to raise. One profitable SaaS founder turned down $20 million to stay independent, using cash flow to fund R&D and retaining full optionality. 5 years later, acquisition offers exceeded what the dilution would have cost. This isn't frugality. It's financial sovereignty, where every dollar serves the mission, not the optics. If you're navigating the funding maze with eyes wide open, hit subscribe, like, and share this video. Tap the bell icon for our latest on innovation AI and startup excellence. Because the strongest startups aren't the most funded. They're the most intentional, with every dollar earned, spent, and leveraged on purpose.
Initial success is just the beginning for a startup. The true test lies in sustaining that momentum and evolving beyond the first breakthrough. Great startups institutionalize discomfort, constantly seeking new challenges and pushing boundaries. This isn't about avoiding comfort, but about embracing growth. They master the art of rotating priorities, adapting quickly to market shifts and internal needs. What was critical yesterday might be secondary today, and that's okay. Protecting curiosity is paramount. It fuels innovation, encourages experimentation, and ensures the team never stops asking what if. And finally, they celebrate every level up, big or small. Recognizing progress motivates the team and reinforces a culture of continuous improvement. Sustaining growth and evolution is the ultimate measure of a truly great startup, built on resilience, innovation, and a forward-thinking mindset.
Courage in startups isn't just about bold pivots, but the daily choice to stay curious when you're wrong. Great founders don't avoid failure. They design for it, treating every misstep as valuable data. They run pre-mortems, asking, imagine it's 6 months from now and we failed. What? This is preemptive learning. When experiments flop, they depersonalize the lesson, asking, what did users teach us about the real job they're hiring for? One fintech team killed a feature but reused its core insight to build a simpler tool that drove 3 times engagement. Failure wasn't waste, it was R&D. Crucially, they protect psychological safety, especially for early hires. Mistakes are expected, hiding them isn't. Courage isn't reckless risk, it's calibrated vulnerability. Launching to 10 users, not 10,000. Sharing an unfinished prototype with a trusted customer, or saying, we don't know, but we'll find out in a board meeting. This isn't grit for grit's sake. It's the humility to be wrong and the courage to keep building anyway. The strongest startups aren't error-free. They're error-intelligent, built by people brave enough to learn out loud.